This is Elton Kane for Finextra at the FinTech Stage Inclusion Forum in Jakarta, and I'm here with Arjuna Costa, partner of Omidyar Network.
Great, thank you for having me.
Arjuna, Omidyar Network's aim is to aim in areas that can have significant impact for the greater social good. Can you tell me a little bit about the areas that you're responsible for?
As you know, the Omidyar Network is the philanthropic investment firm of Pam and Pierre Omidyar, who are the founders of eBay. And our approach to social impact and investment is one of thinking in systems. So how do we have a systemic impact on a particular sector? And my particular focus is in financial inclusion. So I spend my time thinking about how you can build a more democratized, inclusive financial system. And we do that by focusing really on three areas of investment. The first is trying to influence policy, because we believe that policy and regulation is one of the key barriers to unlocking full financial inclusion. The second piece that we spend a lot of our efforts on is actually investing in foundational research around money and how people use money, what their complex relationships to money are. Because a large part of delivering financial services to the mass market is actually one of behavior change. We're trying to move them from informal, often risky and high-cost ways of doing things to a more formal and now digital way of doing things that's hopefully more convenient, quicker, cheaper and safer.
In that foundational research, what have been the most surprising results you've seen?
We just completed some research where we went deep into something called the financial diaries. So this is a type of research where you follow a few households in great depth. So you actually study every dollar or paisa or taka or rupee that goes in and out of the household's income. And you create this very complex diary. And you find, as a consequence of that research, that not only are people finding multiple ways to earn money, they've got a multitude of different risk-bearing mechanisms that they use to manage their money. You and I might think about, a savings account, an investment account, and a retirement account, but the average household in sub-Saharan Africa or South Asia is probably using 12 to 14 different financial mechanisms, not necessarily formal products, to manage their financial lives, which puts them under tremendous financial stress to juggle all this complexity. Right? We take it for granted that your bank's going to be there for you when you need it, but they're actually trying very hard to balance this complexity and make ends meet. And what we found in this research, going beyond that complexity, is that men and women have very different financial lives. And I'll give you one dimension of it, for example. We call it women stretch the money and men try to grow the money. So the male in the household is often trying to look to grow their asset base, whereas the woman's trying to make the cash flow that they have stretch to fulfill all the family's needs in a particular period of time. So it's fascinating research. We can go in greater depth.
You mentioned the lobbying of the regulators. How does that engagement model work, and what kind of feedback from them have you had about your aims?
We don't work with specific regulators. We've taken the approach that in the financial inclusion space, there are a number of very well-established global organizations, and we fund those organizations really to promote their own work. So there's an organization called the Alliance for Financial Inclusion. It's essentially a member network of central banks from the global south. And we're one of a couple of their funders alongside the Gates Foundation, actually. And they really are a peer network that shares information, best practices. So we support their work such that over time, innovation diffuses across these 94 central banks.
So beyond investment in the AFI, what other areas are you investing in?
So the two components I talked about, the policy and advocacy, the research, and then the third piece is really we back a number of innovative startups in the financial services space, which both will scale and have massive social impact, or that's our hope and expectation, and in being successful, will hopefully shift the paradigm of how we think about banking the mass market. And within that innovation framework, we've been very strict and disciplined about thinking about certain themes which we think, if successful, can unlock broader financial inclusion. One of them is, how do you reduce the cost of distribution of financial products and services? Right now, it's uneconomical to reach the mass market if you go through the big branch bank that you and I are used to, right? We've invested heavily around ideas that disintermediate the bank and build a last mile digital retail channel to reach the mass market. If you can solve that distribution channel problem, you very quickly run into a problem of an unsustainably high cost of identifying, verifying, and risk assessing clients. So in that space, we've invested in a number of companies that are using non-traditional data and big data algorithms to try and understand people based on their digital footprints that they're leaving on their mobile phone, their social media account, and other manifestations of their real life that we're now finding in digital format. And those two pieces are some of the front-end digital rails that we think of them as. If you have those digital rails in place, then you want to bring the mass market customer a full, robust suite of products and services that you and I are used to. So you want to get them a proper savings account, you want to get them insurance, you want to get them credit of various forms. You want to think more holistically around helping them think about household financials at an aggregated level and take a more holistic view of it. And more interestingly, we're finding that now we're building on these digital rails to do things like pay-as-you-go solar home systems. So people who live off-grid couldn't normally afford a $300 solar home system. But using mobile money, you can make it a pay-as-you-go product, and you top it up like you would top up your cell phone, $1 a week, and that unlocks electricity for you, right? It's ostensibly a solar clean energy product. Underlying it, it's a lease-to-own financial mechanism, and it all rides on the rails of mobile money. So it's really interesting how the ecosystem building up around this basic low-cost payment infrastructure, which I guess feeds right into the Level 1 project that the Gates Foundation is working on.
Arjuna, thanks very much for that brief overview of Omidyar Network's investment activities.
Thank you. Thank you for having me.